All right, so we're going to do a bit of an update on a stock review on Hood here. And I think it's always important to revisit stocks because stocks that, can one day be sort of not on my list can change. I am not against any stock or for any stock. I'm simply looking at the data that is presenting itself. And one of the reasons that I haven't explained to people in the past about why a stock would not be on my list, but then be able to join my list is its change in status as to whether it is included in the S&P or not. Previously, Robinhood was not a member of the S&P. Now it is a member of the S&P. So my perspective on it can now change, and I will tell you why. Addition to the S&P is hugely important, and this is why. There are ETFs that track SPY, which means that ETFs have to buy any member of the S&P. They have to buy shares in that to match and to be able for the ETF to track the S&P. So inclusion in the S&P gives stocks a safety net or a bit of an insurance policy that they have to be included in all of those ETFs. So there is this thing, as soon as they join the S&P, the ETFs that track the S&P are forced to buy this stock, okay? There's another important note here too about inclusion in the S&P. There are mutual funds and there are financial products that are actually banned and barred from buying any stocks that are not a member of the S&P. Okay? So when a stock joins the S&P, it is basically, again, a little bit of an insurance policy that now there are more buyers for the stock. Okay? So stocks that are not in the S&P just have a more risk to them than stocks that aren't. It's just a fact. Okay? Whether you want to buy something that's not in the S&P or is in the S&P is none of my business. It's just that I wouldn't go heavily into it because I like that insurance policy that being in the S&P provides. Now, you're going to say, like, what do you think about SoFi? Well, SoFi isn't in the S&P. So there's a problem there for me, okay? So we'll go through the whole stock picking system here and just see, because Hood is now in the S&P, what this is looking like. Like, would I invest in this stock? Would I buy this stock? And full disclosure, I am trading this stock now since it joined the S&P. It is now passing my metrics for ownership and also for wanting to trade it. So here we go. We're up 200% in 5 years. This stock has now been on the market more than 5 years, which is good. It's up, this is crazy, 420% in 1 year. And you're going to say to me, Erica, you missed this huge run up because it wasn't in the S&P and you missed all this. And that's right. Those aren't risks that I generally take. I am more conservative than that. And I am conservative because I have just seen too many of these sort of play out in a negative way, okay? And 1 month we're kind of just a little bit up here, but that's great. Okay, so it passes all the charts, that test. For the financials, okay, I'm going to show you something, guys, on this. We have the total revenue, 1.8, 1.3, 1.8, 2.9, 3.7. So there is a fall down here between 2021 and 2022. And I'm going to liken that and say that that's probably an issue having to do with the 2022 pullback. So I'm going to make an exception here on this. It's not something that I would normally do, is make an exception, but I think that there may be an explanation there. But it would be interesting to see in the future if there is a big yearly pullback in the market overall, if it affects Hood in this way. That would be something I'd be looking out for in the future then. So when we look at the gross profit, we see it going up as well, except for in that 2022 year. Hood does not have a dividend. It is too new as a company. It is not making enough money yet to pay a dividend. And then, we always have to understand what Hood is as a company. They're a new brokerage firm. They are kind of the leader in innovating how brokerage firms work. It's kind of wild though. I trade on Hood. I do like Hood as a platform. I think it's very innovative as far as the tools that they have implemented on the site so that they make trading easier. That being said, their tech support completely sucks, and my husband has been locked out of his account for 2 days during a Fed rate determination. So it's a bit of a love-hate relationship I have there with them on their actual service that they're providing. As a side note, okay. Okay, so what I want to do here is I just want to say, Hood, it looks great, and it seems like it's going to perform very, very well. It should continue to get a market boost in the next 6 months if the market overall is going up. Hood will be a big beneficiary of the market going up because stocks that enter the S&P usually have a fantastic 6-month period thereafter. Okay, that's one of the reasons that I'm trading it. However, I want to compare and contrast this to JP Morgan Chase, and I'm going to show you why, okay? So look at these numbers, 1.8, I'm going to say this is billion, okay? If we go to Chase, JP Morgan Chase, and we just look at their financials, okay? Just because we already know this meets the metrics. Look how much bigger of a company JP Morgan Chase is as far as how much money they pull in total revenue. Okay, so when you are investing in something like a JP Morgan Chase versus a Robinhood, the Robinhood, you're investing in a little bit of the cowboy, and the JP Morgan Chase, you're investing in a little bit of the smart money. Will JP Morgan Chase make these huge blows up to the upside? Probably not. But is your money kind of, gonna stay around the same range in a pullback with JP Morgan Chase more than it would with Hood? Yes. So there's considerations that we all need to make here. I believe during a standard pullback, Hood would suffer much more than a JP Morgan Chase would. So that's kind of how I evaluate these stocks and how I want to position them and allocate my money inside of my portfolio. These are the kinds of considerations that I make. So I hope that helps.